what to do with that. Who is in control of that, right? And so what we see all of the time is these issues are set up to be tax efficient, to help with estate taxes and passing generational, and then they're not doing anything with the cash. The cash just kind of sits and it starts to compile and compile and compile. And then they say, well, we need to do something with this and we need to figure that out. And so what our approach usually is look at it as if you are a corporation, right? You should have policies and procedures. You need governance alongside these structures, and not just legal governance and things like that, but institutional decision-making processes, right? Because
welcome to AFO Wealth Management Forward, a podcast about finance, accounting, technology, and entrepreneurship. We apply our decades worth of experience and insight into what makes businesses work, so we can help others grow both personally and professionally. In this ever-evolving marketplace, we help accounting firms and financial advisors grow their practice through the adoption of holistic wealth management services. Learn from industry leaders and subject matter experts to unlock the secrets of their success. A podcast that shows people and companies the transformative power of technology so they don't fear it, but instead harness it. Don't fight the robots, team up with them. And here are your hosts, Rory Henry, Director of Business Development, and CEO Rob Santos of Arrowroot Family Office.
In today's episode, Rob interviews Mark Pierce from Wyoming LLC attorney. Mark is an attorney who's been practicing for over 30 years and specializes in the areas of estate planning, asset protection, wealth strategy, business planning, and more. So without further ado, check out this family office themes episode where Rob and Mark discuss the complexities and strategies of working with the high net worth.
There we are. All right. Mark Pierce, welcome to the podcast. Super excited to have conversation today. Rory has given an intro already, I believe, of your background and everything, so I won't double that up. But I had the pleasure of speaking on a panel with you at the Accounting Web conference a number of months ago. And so just really excited, to have this conversation today. How you doing?
I'm doing well, thanks. How have you been? Thank you for having me on.
Like I said, I can't complain. It wouldn't do me any good. But it's great. It's great to have you on. So, I was thinking today, we could just kind of discuss from your perspective, some of the things that are happening in the country, in the world, in our clients' lives, those pain points that, you're addressing in your practice, and some things to kind of think about. What's kind of top of mind these days for your clients, and what are you guys doing to try to address some of that stuff for them?
Oh, two of the major issues are asset protection that goes hand in hand with wealth preservation and tax issues. But more importantly, I think as an adjunct to that and overlay to that is generational transference of businesses and wealth to a younger generation to provide for the perpetuation of the efforts of, say, the parents or grandparents onto the subsequent generations. And I run into a lot of issues with that right now. It seems that since we've had a little bit of a downturn in the economy, I don't think it's a recession yet, since that has come into play, I've had a lot of inquiries of individuals who have suddenly become very concerned about what it is that they're going to be doing 2 or 3 generations from now. So it's a real issue trying to get people to institute the appropriate procedures to make sure that that happens, but also letting them know that they need to let go. You can't dictate 20, 30, 40, 50 years from now on today's terms what these people should be doing with their money and how they should be doing it.
Yeah. No, that is such an incredible point, because on our side, on the family office side, and we're providing multi-family office kind of back office services, usually we're getting introduced to those families after they've spoken to someone like you. And so someone, they've got the structure set up, they've got the plan in place to do all this stuff, and then they don't want to do their homework. They don't want to have those hard conversations. They don't want to sign the papers. They don't want to give up the control. And so on our side, we have a whole lot, and I'm sure working in tandem with folks like yourself too, of not just convincing them of these are the right things to do, but then helping them to actually do the tasks to put it into effect is very, very difficult, right? I'm sure that's just getting more complex as the landscape shifts. And, we're seeing with legislation that's coming out about tax change, potential tax change laws, carried interest. There was talk earlier in the year about changing the estate tax. And so I'm sure you saw a flood of activity of people trying to get ahead of that. And that ultimately didn't really happen. How do you keep people focused and moving forward on the big issues and then start working through the smaller stuff?
I think it's really necessary the first couple of meetings as you sit down with your client that you generate or establish a repartee with them so that they understand where it is that you're coming from, that you do know what you're talking about. You have worked your way through these issues. Many of the issues that they're going to have as a family are not unique. These are issues that everyone's addressed. There are issues that are unique, however, that need to be addressed. And I think that more than anything else is to get them to realize that the only part of the economy that doesn't involve change doesn't exist. Everything involves change. And just the other day, I was articulating to a client who's been incredibly successful that he wanted to peg investments to the S&P 500. And I thought, well, what if there isn't an S&P 500 50 years from now? And I thought, at the other hand, what happens if you're in a post-capitalistic society as well? Because we were looking for capitalism when we found it 300 years ago. So you have to deal with the transitions and the issues that come. And you have to be able to engage someone who understands that and engages someone to assist them with the implementation of what's best for those businesses under the circumstances.
Absolutely. There's so much there. We could on that last comment, I think we could probably spend a few hours talking about it. But one thing that really jumped out at me on what you just said, because we're working like you with a lot of accounting firms, right? Mid-size, large size, small accounting firms that are shifting from compliance to more of an advisory role. And a lot of them, that first step into advisory is tax planning, right?
Sure.
The go-to for a lot of those folks in the tax planning is, let me show you how much money I can save you in taxes by doing my tax planning, right?
Yeah.
But working with somebody like you is really the next step. We talk about family office services incorporating estate planning and wealth management and insurance and all of this other stuff. But really, if accountants are starting to go down this road to advisory and they're starting with tax advisory, doesn't it make a whole lot of sense to do tax advisory in tandem with estate and structure? Because they can do the same thing at the end, right? Just say, this is how much money you're going to save if you do this, and show a dollar amount that really incentivizes people to act as opposed to inaction. Did I hit that right?
Yeah, I think you hit it right on the nose. I'm a CPA too, right? So I've been in the tax code since 1975, wallowing around in it. And one of my tax professors had said at one time, never let the tax tail wag the dog. So I find generally most people come into the office wanting to save taxes. That's great. You should never pay any more tax than you actually have to pay. But there are a lot of additional factors to take into consideration, not the least of which is the ability of your family to implement these strategies and carry them through once the accountant leaves the room. And I had an example here the other day. A good friend of mine who has developed early onset dementia had some clients come over, and all 5 of the siblings had done something without the advice of tax counsel. Now they wanted to reverse it because the mother was on her deathbed, but you have a 2-year clawback on some estate planning issues. And, the finger point had started. And they said they didn't get appropriate tax advice. And I said, I'm sure that you did, because I know this guy, and he is an excellent attorney. So you need to quit, dropping the gloves and squaring up and go address the family issues that you have here, not least of which is the fact that all 5 of you need to get in the same room and resolve these issues, because taxes aren't the only issues that you have. So my feeling is that with the accountants, is they perform a very necessary part, but just like attorneys, only one part of it. And
Right.
when you start dealing with family offices and bringing all these different disciplines together, you're acting more as a mediator in some respects to get this family where they need to go. And one of the issues I find sometimes is that I'll tell people, look, a 1031 is a good idea. The step up in basis on 1014 is an excellent save all for people. But on some other issues, you might want to recognize tax now, or you may want to establish businesses in a jurisdiction that's free from state and local taxes as a part of the paradigm that you put together for your business involvement. And that involves a services such as yourself, providing that family office and that type of understanding that an accountant or an attorney may not necessarily have.
Yeah. One situation we get a lot of is, the structures are set up, the estate plan is set up, the tax plan is set up. There's a lot of different trusts. There's a lot of different entities. Cash flow is being passed to these various entities for tax reasons. And then the family has a very big problem of what to do with that. Who is in control of that? Right. And so what we see all of the time is these issues are set up to be tax efficient, to help with estate taxes and passing generational. And then they're not doing anything with the cash. The cash just kind of sits and it starts to compile and compile and compile. And then they say, well, we need to do something with this and we need to figure that out. And so what our approach usually is look at it as if you are a corporation, right? You should have policies and procedures. You need governance alongside these structures, and not just legal governance and things like that, but institutional decision-making processes, right? Because what we used to see was we would kind of say, here are your decisions. Like, you guys go into your room and come out and tell us what your goals are, and we'll help you try to implement that. What we quickly found out is we needed help to actually set the ground rules for the family. How are they looking at these? Who's going to make decisions? How are they making decisions? What's the pros and cons of some of these things? And start to institutionalize decision-making and goal-setting priorities, and then being able to compartmentalize that for different family members if they want to do it, right? In coordination with tax and legal and things. And it's not the sexiest work. A lot of accountants and attorneys that we talk about instituting institutional class investment committees, of the family, right? And how the decision-making process, how the due diligence process works, how the cash flow, who's in control of what capital, and who gets reporting on what, and whatnot. And everyone we talk to is like, that sounds absolutely miserable. But, and it is really hard, but we've seen that be transformative for families. Is a lot of these other things, these softer points that are really, really important, that are not directly tied to the tax return or the estate planning or estate plan being put together, but really operationally important. I mean, I'm sure you've got all kinds of horror stories of family dynamics. We all have families, and there is no normal family with a normal family dynamic. How do you take on the family dynamic? What are some strategies you could give some of our folks about the family dynamic?
It's getting to know the family over a period of time so that you understand the dynamics within the family. And the bigger the family, actually, sometimes the easier it is, because you have certain individuals who are very good at some things and are not very good at others. And most families recognize that with themselves, because they may not see themselves clearly, but their siblings certainly do, or their cousins certainly do, that sort of thing. So one of the great things about the evolution of this field is that within the trust context itself is that you have committees. You have these directed committees that perform functions that relieve the trustee of overseeing that and put the functions onto the family members who understand it, like investment committees, distribution committees, administration committees, business investment communities within the various industries that the operating entities under the LLC are in. And people understand that. And they will know that, you may have a person who is a brain surgeon who may not be the best at managing the money from an investment context, but yet thinks he is. or she is,
Yes.
that person would probably be better in an administrative capacity because they've worked in that administrative capacity, healing divisions within an operational context of a hospital. That person is wonderful on the admin committee, and then let them sit in on the investments if they want to have something to do with that. So it allows kind of a smorgasbord of interest to go on with the family. They can pick and choose what it is that they want to do, and they can bring their strengths to bear. And my experience with families is that after it works for a while and families see how it works, it's a benefit to them because it takes a load off of their shoulders, because like it or not, most people think that accounting, distribution, and investments are dull. You and I may think differently, but then again, we're educated in that area. So
Yeah.
I think it's a relief, and it takes a load off of people's shoulders.
Yep. And the other thing, I think one other thing that we see a lot with families is, especially very, very wealthy families, is a tremendous amount of distrust, right? Everyone is coming out for them, for money or for investments or for, everyone. So it sets up this kind of level of skepticism, which is, fair. There is, so working through that and building that trust, it does take a tremendous amount of time. The other thing that we run into that has a lot of skepticism is what's in the news. We've got Robert Smith, who is the founder of Vista, one of the largest SaaS private equity funds in the United States, who I think just paid the largest settlement ever for tax evasion and things like that. Are there any major red flag things that some of these families should be cautious of? If someone's saying, if you do this, you will save on all of your tax of everything and whatnot. When we're seeing folks like Robert Smith, who is a very intelligent man, who has had his hand struck quite hard. What are some things that people are kind of pitching out there right now that people should be afraid of, or at least cautious of?
Well, I mean, you run into it, right? Cryptocurrencies, DAOs, these sort of things, these Web3 type of things that, I read a lot about it. I have no idea what it is yet, but I'm fascinated by the probabilities. A seamless transition into a management-less society. Who drives the result? Who shows up and gets something in front of you to look at and to be compensated for it and that sort of thing? So the thing that I've always thought was interesting is the Madoff complex, that somehow we've arrived and we deserve this thing. If it sounds too good to be true, it's too good to be true. You need to get really good tax and professional advisors who, kind of take a jaundiced view towards these sorts of things and said, prove it to me.
Yep.
And bring that in. And you have to be very, very careful about the professionals you select. And, I just throw it back. If you have a good accountant, they're not really looking for work, most of them right now. They're overloaded with work.
Yeah.
And it's the same way with a good estate planning attorney who actually understands the complexity of the estate and gift tax provisions, which for 10 years, no one thought about. And, I've been in estate and gift taxation for 40 years, and I look at some of the advice that comes down to the pike. And my question is, how long have you been doing this? And they say, well, 3 or 4 years, but I started over here with this and that. And you look over, you say, well, in another 10 years, you might get your feet wet because of the complexity that's involved with that. But you have to pay for somebody to come through and work you through that complexity. You're not going to get a DIY thing off the internet and be able to manage these trusts and these businesses underneath those trusts, and most particularly the tax aspects of it.
Yeah. We, you said it earlier in our conversation, don't let the tax tail wag the dog. And I think you bring up an excellent point that don't let the cost of good advice wag the dog either. We've seen, especially some of these larger families, very, very cost conscious. It's probably how they accumulated as much wealth as they did. They were, very, very good, shrewd business people. But, when you bring it into the context of insurance, where you say, look, you have insurance on assets, on your life. These are all very, very valuable type things. Getting good advice from maybe multiple parties to be able to confirm that what you are doing is correct, and paying some of that, paying something to give you that peace of mind is a fee, and that doesn't feel good. But think of it as insurance of protection, and again, you lift up, Robert Smith, you lift up other folks that have been in the news, a lot of movie stars and, things like that, that, did stuff maybe because of the advice of just, one person or whatnot. If they had spent a little bit of money to be able to get confirmation from a few different professionals and spend some time doing it, it would save them millions. In the case of Robert Smith, billions of dollars. Who knows? Maybe he knew what he was doing, and he decided to go for it anyway. But do you see that kind of tension between, paying fees for peace of mind or risking it and, trying to save a few bucks?
Well, if I run into that, Rob, I just get rid of them as a client because they're just too much of a headache. The easiest part that Smith had was writing the check. Can you imagine the excruciating time process that went on while the IRS began to nibble away, and he dealt with attorneys, and it was distracted from his business and it distracted from his family, and none of it comes up when you really want it to come up, like vacation time or holidays, that sort of thing, which I think is kind of bland sometimes. At the end of the day, he wasted 2 to 3 years of time and effort dealing with an issue he should never have had.
Yeah.
So if he had just written the check and gotten done with it, he would have been great. And that's what, like I tell my clients, when you sell your business and you get that check and you've gotten the taxes figured out, cut the check right away for the full amount, and then go home and forget about it, because now you're even with the government and there's no knocks on your door. You will sleep better. And the idea is to pervade a real positive attitude about what you're doing so that you can move forward instead of constantly looking back behind you. And now he's a mark. So
Yes.
as a result, he has to, every year, his accountants go in and say, what have you been up to? Do we trust this guy? So he's a part of a committee that's a part of a committee that go through him with a fine tooth comb every year as a client to see if he's worthwhile, because they cannot afford to lose their licenses. So he has a mark on him and the IRS has a mark on him. So you can bet that on all those gray areas, he's not in those gray areas. He's in the black and white area. He's in the white area. Otherwise, he wouldn't get the representation. So you have to look at the continuing cost of him by trying to cheat a little. We live in a great country. You've got the taxes, pay them. Doesn't mean you have to pay more than you owe, but you do have to pay what you owe.
Yep. No, I couldn't agree more. And, one thing I wanted to bring up before we kind of get some of your final thoughts here is, and you just brought it up, a lot of families have a business that they're thinking about selling or passing down, or they have considerable assets. We see a lot of families that are real estate families have a considerable amount of properties, thinking about maybe diversifying those properties or refinancing those properties and doing things like that. But one issue that we see all the time is that the matriarch or patriarch come to us when they're exceptionally old, and I don't mean, this is all relative, but we get approached by them. They say, okay, well, we've built all this. I'm 82 now, and I have grown children. We have all this stuff. Let's go ahead and do all this stuff now, right? And there's like a lot of things, I think people tend to procrastinate or put hard decisions off further and further and further. Could you just spend a second talking about how important it is to start earlier as opposed to later with some of the things you work with?
Yeah, I tell clients that when I see 30-year-olds come into my office, it's like, I know this is going to be a successful family because they're involving everyone in the process and it's transparent to begin with. If it's transparent to begin with, you don't have the sibling animosity back and forth amongst one another that someone's taking advantage when they shouldn't be. That's the first thing. The second thing is, you have to get rid of this idea that you live forever. And I had a client who died at 85. like George Burns says, when he got to be 90, make my 1-minute egg 30 seconds just in case. Your life expectancy, whether you want to admit it or not, is pretty small. Just look at the actuarial tables. So the best thing that you can do is bring those kids into the business when they're in 20s, 30s, 40s, and give them your experience and maturity so that they can apply it to what's going on.
Yeah.
Otherwise, I think you're really doing them a disservice. When you're 85 and you pass away and your youngest son is 60 or 55, their life is set. And if you're taking that into context, of bringing them into that business, you're in trouble. But the other thing is that you've been in your business for that period of time. Your kids may not be in that business. So you bring them into that business, say, here, run it. That's very difficult to do. I know very few people who are able to go industry to industry to industry and perpetuate their success. They're usually pretty good in one, they get into another and they fail, or they do miserably and they're miserable doing it. So that's my advice to these people is start early if you can, but start at some point in time. And your plan doesn't have to be perfect. Get it, run it, over time, adjust it and pay attention to it. And like you said earlier, it's painful. It can be very painful. And these are difficult conversations that you have to have. But if you have them earlier, it gives the time to heal from it.
Yeah, I couldn't agree more. The most successful families that we've worked with have started earlier. And even though it was very difficult to start including the siblings or the children into those conversations when they were maybe teenagers or maybe in college, it was difficult because, some of us were not very agreeable or thoughtful teenagers or people when we were in college, right? It's hard to bring people in and have real conversations around stuff, but it paid tenfold in dividends for later on because those hard conversations were had over 10, 15, 20, 30 years. And processes and education were developed in those siblings to start to see what was important, how the process works, where they fit into that, the best use of their time versus value. And it just has a tremendous effect later on versus I think a lot of matriarchs, patriarchs think they're shielding their children from the pain and from all of those issues. And they're allowing them to develop on their own. And hopefully someday when this all transitions, when they're gone, they'll be ready for it. But they're actually doing a really big disservice, I think, to their children. And honestly, even just from an emotional standpoint, it's heartbreaking because that latter situation ends up being really problematic for a lot of families. If they haven't done that planning or put that time in, just from a personal level, you see a lot of those families break up after the matriarch or patriarch passes away. And it's absolutely heartbreaking.
I think that's an excellent point. If you lead the second generation, not so much, but the third, if you lead that sheltered life, and then you're thrown into the melee of business, which is brutal, that brutality that is inflicted on those sheltered individuals is not very well digested by them, and they think they're being picked on or they're victimized, these sorts of things. You and I both know that's just day-to-day life, where some people are just going to be nasty towards you, or they're sneaky, or they lie to you. And at the end of the day, the quicker you get used to that, the better off you're going to be. So when you're in your 20s and your 30s and you run into that, you can start to sniff it out. But when you hit it in your 50s and 60s, I think you're at a loss.
Yeah, I totally agree. So final thoughts here, Mark. Anything in particular that's kind of top of mind that you think our audience, our collective audience would find interesting?
Yeah, I think so. The evolution of trust and estate planning, the evolution of the underlying assets, the LLCs in particular, limited liability companies in particular, have really evolved over the last 20 years. It gives you a level of protection if you provide for the right planning that did not exist 20 years ago. You would be a fool not to take advantage of that, because the legislature said, here, this is for your benefit. Just avail yourself of it. So you can do your tax planning, your investment planning, your legal planning, everything in one boat with a variety. And more importantly, I think within the last 20 years, we've become much better at it, so that we can bring a client in and evolve them through that process much more efficiently, much more effectively than we did 20 years ago.
That's wonderful. Well, Mark, I really appreciate the time to talk with me. It's always a pleasure. There's like 100 other things we could continue to talk on. I think we're going to put on a webinar for you to give a full presentation of some of these other issues, and we're really looking forward to it. We will put your contact information for people to be able to find you on the podcast after this, so everybody can reach out if they've got questions. But I really appreciate your time and looking forward to our next chat.
Yeah, I look forward to it as well. And thank you again for having me on.
All opinions expressed by Rob Santos and Rory Henry on this website podcast interview are solely their opinions and do not reflect the opinions of Arrowroot Family Office LLC or their parent company or affiliates, and may have been previously disseminated on television, radio, internet, or another medium. You should not treat any opinion expressed by anyone as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their opinions. Past performance is not indicative of future results.